Back again, hurrah! So it's going to sit here, chill out, watch the markets, see what happens, especially around the US Open. So yeah, fingers crossed something actually does come along and make it a bit more interesting than just sitting here and talking to myself. Hello, John. How are you doing? So yeah, I'm very relaxed, very chilled out. Nothing too worrying about today. So a few things have been moving in the past hour or so. There's been no news that I've seen coming out, nothing dramatic that would actually want to move the markets, but gold has spiked up quite dramatically, which did take me out of my trade, which is a bit of a shame. I was looking forward to taking a bit of profit on that one today. But as always, reducing the risk and managing it correctly. I think the key thing there is that literally just before it spiked up, I had a quick look and it just about got into profit, and I was very, very close just to closing it out, just to clear the decks. But then literally straight away it moved back up. So let me just quick look at that one on gold. So I was short from here at 1889 level from this morning. My stop loss was 5 points higher, so that was the range I was worrying about. And just about here I popped in, had a quick look, and yeah, it was just about in profit. I thought, okay, no, I'll just leave it a bit longer, see what happens, especially around the pre-open of the US market, because often things can go a bit wild. And literally then within 5 minutes, 5 to 20 minutes, all the way up, taken out. I also closed out my trade on Bitcoin as well as my trade on Euro. They were both in, sorry, Bitcoin was winning, Euro was losing. I was clear the decks, clear all the trades off, and just sit back and relax for the rest of the afternoon and see what happens. British pound's tanking a bit now, which possibly as expected. Going back out, let's look at the hour chart. We've had this rejection at 142 quite consistently 4 or 5 times now, and it's been as high yesterday, 141.80, 141.90, and like I say, just been rejecting off around that zone and quite nicely coming down. But it is now getting to, again, if we are looking at range bound, we're getting into that bottom end of the zone now. So if we get another 20-30 pip movement down, then definitely there could be a buy. Who knows? Just waiting. We can see just the moving average, though we don't trade off indicators. They are so tight and congested in this last almost 2-3 days. We are just going sideways. And I don't like to trade when they're so close. I like to nicely expand it out. What else is going on? Euro. I think Euro is going to gain momentum for the rest of today. If I bring back onto my templates the pivot points. Just takes a little while to refresh these. We've broken up through R1. Pivot was quite nicely broken earlier. It's around that level. Yeah, bounced around, got support for the pivot, bounced, hit R1. Sideways for a bit, and now it's gaining momentum kind of all the way up to R2. So that's why potentially I wanted to close out my my short position on this one. I just want to make sure that I'm in the trade for the right reasons, and at the moment it's just not the right reason for me trading short on euro dollar right now. Beginning of the week, definitely, yeah, I was set up for that correctly, but at the moment it's just not there for me. 5-minute chart on Euro, yeah, just confirms that we've broken through resistance 1, just gathering momentum all the way up. So we've only got 10-15 pips more to get to R2, which potential that could be where we start shorting in at 122. So yeah, by all means, if anyone's watching, add comments into the chat. I will do my best to respond and get a bit of a chat going, but this is really just a chill out for me in the afternoon because I've not spent much screen time this week. I've been more doing analysis in the morning, setting the trades up, letting them do their thing, and rather than actually looking for live trades in the market. Yeah, definitely with the US session coming on board in 25 minutes, we've got a bit of a chance now to get a bit of volume coming in because it's just flat. I think what's also quite key is if anyone's using the FTMO platform at the moment on any challenges, we've got some obviously additions to some of the NASDAQ stocks. I've had a quick look, for example, Amazon here, looking at some of the pre-opens on tech stocks. Apple is flat in the market, pretty much nowhere near it. We have a look at Tesla, just to see if Tesla's going to gap up. Pretty much again, nothing, fraction of a percent on Tesla. And finally, Amazon. Let's just see if there's anything happening on Amazon. Any gaps? Again, pretty much flat as well. So NASDAQ, all the tech stocks, all the big movers typically where we get seen a bit of aftermarket news and gaps, they're all flat. So it's just showing to me at the moment there's not much pre-market volume coming in. And that's why we start looking at some of probably the Dow Jones, the FTSE at the moment is just sort of trying to find that direction. So Danny's just saying is in EU and GU long. So let's see if I can find. Definitely lots of opportunities for any direction at the moment. As I said before, we're just in this such a sideways range. It could be anything. You can almost toss a coin and that's the direction of your trade at the moment. Okay, so Euro, again, go that bigger time frame, definitely. Let's take the pivots back off this. Definitely coming up to that real congested zone for me. I can go right back into anything in this zone is a potential for me to start shorting. Very tight stop loss, 20 point stop loss, and short come all the way back down to 121. So definitely contradicting to a lot of what other people would say around trend trading. Euro on a daily chart is still in an uptrend. We are making higher highs slightly, just about. Depends where you argue whether this low test bar a week ago constitutes a low, then we've got a new lower low. I would say I'd ignore that one. Kind of want to be in a trade because it's always more enjoyable managing a trade and watching the price go up and down. It gives you a bit more of a focus when you see things going from red to blue. But I'm also very conscious of protecting the capital and equity and not going and blowing it for the sake of just trading. Just saw an article pop up on FX Street for gold outlook. US inflation data, ECB meetings. Doesn't sound like they've got any particular direction. Just waiting for data to come out and see what that's digested by the market. It's just, I say, yeah, waiting for more possible steer monetary policies. I get these pop-ups in Chrome. They just come up on the side of the screen out the corner of my eye, so it might be quite useful to have a quick look at that one. But yeah, it would be nice if they said the price is going to crash, I'll start selling it. Anyone holding cryptocurrencies, Bitcoin at the moment? Definitely seeing some dramatic moves. This is a 15-minute chart, so we've seen obviously a nice start of an uptrend again, which is quite nice to see. We've got a bit of, there also was a breakthrough yesterday to get the low of 31,000, but obviously price since then has been recovering and coming up quite nicely into 35,000 today. Start going out time frame wise, still under a lot of pressure. This is a typical pattern of a descending triangle, so looking for price to come up to the triangle and then reverse back down into that support area, and then if it does break, if we believe all the technical analysis, we then start seeing price coming all the way down pretty much that first move. So you then be looking at price coming down to 19,000 on Bitcoin. Definitely not one that's going to happen. I can't see that happening. I think there's too many people right now who have bought Bitcoin to hold it to start selling massively. We know Elon Musk has got a huge stake in Bitcoin. He keeps tweeting how he's heartbroken over it. If he'd obviously realised how bad it was for the environment, he may not have gone and bought it to start with. Obviously, he didn't do his due diligence. And obviously, people started complaining that he's obviously offset all his green taxes, then gone and spent that money on Bitcoin, which is the most polluting of all the coins right now. But yeah, definitely cryptocurrencies are interesting to watch. Leave that one alone for now. Which is interesting, had a big sell-off today. Again, rejected the 7,100 level, came all the way down to 7,030-ish, 7,020, so a 70-point sell-off in the past 2-3 days. Bigger sell-off today as obviously the market opened, and it's now started to reverse that. We've seen these bars come in. So we've seen these 3 bars on the hour chart, which would all argue that they are reversal bars. Obviously we've got pretty much the price coming down and always closing up a lot higher, so therefore price has been reversing on those 3 bars. If that is a signal, then obviously price is going to move all the way back up to 7,100 based on where it's been recently. I think I'd like to sell, but not within 15 minutes of the US session opening. So 70 points off the high. It is now retraced 33. Those come back 50% from the fall. Anyone's interested in Fibonacci retracements? No, you can't see that colour. Get the colour a bit nicer. So if anyone was looking at Fibonacci retracements, we are literally coming up to 50%. Is that a significant level that I'd want to worry about? Not really. It's gone very, very quickly through the previous levels, 23.6, 36.2, right up to 50. I can see it's coming all the way back up, way above 61.8, and therefore Fibonacci's, as always, being useless. I think it's where people get carried away, adding in indicators and certain things to their screen. Price, as always, tells us what's going on more accurately. It's how we interpret that is also the big question. If I'm looking at indices, FTSE at the moment, this is going to be a potentially a higher close of the day. Let's just compare that to the Dow Jones. So US 30, that's very much static and has been for a couple of days. We could almost draw it all in a very tight band, can't we? How much is that on a range? 170, 180 points in that range. So yes, not doing a lot. But we shall see. I mean, this is always the scariest time of the day. This gap between probably 12:30, 1 o'clock and 2:30. It seems to find that a lot of the European sessions take a lunch break. Volume does really peter off quite significantly. Unless there's some big news coming out. Let's say ECB interest rate figures could be 12 o'clock. So if there's some big news announcements coming out, I'm sure they'll sit at their desk waiting for that to come out and do a bit of trading. But yeah, we often see a bit of flatness coming in before the 2:30 UK time US session open. So now all my lines have been invalidated and no longer valid. Clear them off the chart, otherwise it's going to cause me more confusion later. I'll be wondering, why did I draw this line in? If we now start looking at levels of resistance in there, we can see we've got 3 clear touches at 1896 on gold. Now that's obviously going to get stronger as we go through the session, but a break of that will start seeing us come all the way back up into 1905, possibly 1912. I'm almost tempted with gold though, is to wait for it to break either 1887 or 1897 and then see what it does after that. Let it define a direction, because all the time we're in this very tight range of $10 movement, we're just going to get caught out very, very quickly. Now, I still believe we are potentially more bearish on gold, and therefore 1850 is a more realistic figure based on what happened last week and some of the news articles coming out. But what can we do? We've just got to wait. So the question asked, why don't I use TradingView? I don't particularly like it, is one of the answers. Many years ago when I first started using TradingView, it was quite good. You could actually log in with your details and it was there, it was fantastic. But over the years, also got a bit more commercial, they keep getting the pop-ups, you want to pay for it, and I'm not willing to spend whatever it is, $30 a month on a charting package. Now, although in the free version it's pretty good, I just don't like having those pop-up adverts. Now, because also with a broker you can't link directly from TradingView into majority of the brokers, you're using it as a charting package, and there's only a few features there that are actually quite useful. I think most of them I can get on here. I only really worry about drawing lines on a chart. TradingView has so many other features that I think are just not useful and just tend to get in the way, so I just don't want to use it. Occasionally I'll use it if I'm looking at ticker data on the NASDAQ as an example, which is quite useful if you're seeing some big ranges. So if anyone's actually looked at the tick chart, we can see some momentum. So anything above 1,000 or minus 1,000, we're seeing a significant change in the number of stocks being bought and sold. And that's actually quite a useful indicator. And also a lot of people use that for some significant trading. And you get the tick chart on TradingView. You don't get it on a lot of the other platforms, but that's the only thing I really enjoy about TradingView. It also stops me getting confused. If I'm drawing everything on my broker platform, the prices are there, and I'm not sure if there's ever come this in the past, is people always claim that brokers manipulate price and keep moving up and down to take your stop losses out. The reality is they can't, because obviously they're regulated and they can't start messing things around. But you will see different spreads or different feeds from different people. And what you'll see is that sometimes price will move maybe 1 or 2 pips around that, but if it's on your charts, you've got no issue with that. Whereas if you're seeing price move slightly differently because there's a different broker providing your price data, you've got no argument if you ever go back to your broker and saying price traded at this level, and they'll say, well, it didn't because only our charts are showing this one. So my preference is use the data from one source, and if that's my broker, then that's what I'm going to use. So is that a question about never seen the tick chart before? Because there's tick charts for majority of stock indices, and the bigger ones the better. Now, if you ever read anything by John Carter, he also uses one of his big methods. So he has alerts set. So if ever the tick hits 1,000, so if it goes up to plus 1,000, he'll go straight in and sell on the stock index. If it goes below, then he'll buy. Below 1,000, he'll buy. Try and get this into a full chart. So as we can see here, the tick has not dropped below 1,000. Those ones annoying pop-ups. Again, that's a weekly. If we look on the 5-minute chart, tick has not gone above or below 1,000 for a long time. That's really showing no real. It's just very balanced. So this all goes on the number of orders coming in, and if the number of orders are significantly higher or lower than the other ones, then there's getting imbalance in the market and price will reverse. But we're seeing here it's in normal range, and obviously this is based on the number of stocks on the stock exchange. So if you've got a significant number, all are a lot higher, then you're going to get a lot of sellers coming in to take a those price. If we zoom out slightly so we can get more of a range. We've only had above 1,000 4 or 5 times in the past couple of weeks, and below 1,000 it's hit it once or twice. But obviously these could be around the opening bell. So if you look here, that's around the changeover of a day, so therefore you're going to get a lot of orders coming in at the opening, so you want to wait for all those to die down, and so some of these could be at the close. Again, you're going to get a flurry of orders coming in at the end, so you want to wait for those to come down. But so if you look at a 5-minute chart intraday, that's where this particular strategy works very, very well. I'm still working on it, I'm still trying to refine and hone it, but I've not managed to get all the alerts and the triggers and the alarms set up. So back to looking at gold, you can see it's just potentially getting to this wedge almost, without any really clear direction, just ranging up and down. But definitely, if you're interested in anything on a tick, go and research by John Carter. Mastering the Traders, the book, there's a big section there on it. I'm sure he's got loads on his blogs or on just search YouTube for tick trading. So what are we, a minute away from the open, so let's go to US 30, so Dow Jones, 5-minute chart, see what's going to happen. Not a lot so far. I think Euros has had a bit of a Euro is now breaking up to that 122. So I'm sure everyone who was in long Euro has been thankfully going, hurrah, we've got some momentum coming in. Is this going to be a sustained push, or do we take a punt and short it? I'm quite glad I actually closed out my short on Euro earlier, otherwise I would have been taken out for a stop loss and probably another 1/4 or 0.5% lost. So I'm glad I closed that out. Right, let's look at 4 hour on the Euro. Definitely potential to go higher. How much higher, I don't know. 122.7, which is recent high. So Danny's got his take profit at 122.37. Draw that. I think that's definitely a potential for the cards for today. I think where we've seen a break of this area, zoom in a bit. Where we've seen a break of that recent high, we've got potential to start really coming up to those newer highs. Again, just for, let's bring in the pivots, because they do give quite good indications of where price might hit and stall. So we've gone through R1, R2 wasn't even, went straight through that. R3, 122.2 potential. And it often doesn't get above R3 on any particular day, especially where the range has been quite tight in the past week or so. So it's up 40 points now, which is quite a reasonable range for it to go up. So look at NASDAQ. List on here, US tech. This is one of the few reasons why TradingView is quite useful, because there are lots more things you have access to. Usually things that I wouldn't trade. It's not the NASDAQ, is it? Yeah, good break on that one. Just wondering whether this push on these currency pairs, so British pound and euro, does that surge up start to weaken, or is it carrying on? Euro definitely is looking like it's potentially going to carry on. Pound, I think there's possibly, from the selling pressure for the morning, this is just a bounce up and it's going to come down. I am going to sell just a very speculative short here on GBP USD, so cable. Price has pulled up significantly from where it was. I think we looked at this earlier, it was 50% from that was on FTSE. If we look at, that's pushed up 30 pips since the low of this morning. But it has been considerably weaker based on the sell-off and where we are potentially in, again, this congestion zone right in the middle of where it is. So I still think, if I'm looking at the analysis of this one here where it's been rejected multiple times, it's always come down to close to 141. So let's take profit in here. Keep getting missing the data. Idiot. Rather than number of pips away, I'm putting the price 1.4125. So I'm looking at a 40 pip pretty much for a 15 pip pretty much a stop loss, so 3 to 1 on that particular short. We'll just see what's going to happen, see if it comes off. US 30 has not made any significant push. Just look what the FTSE has done, exactly the same thing, it's mirrored it. Price started to return up and has literally rejected off. Gold is being more bullish, as we'd expect. If people are seeing a bit more negativity in the equity markets, they obviously want to start putting their money into gold. So obviously we've seen gold rally up in the past hour. Again, zooming on 5-minute chart. Fairly big bar on that one, because when you consider that most of the bars yesterday were literally $0.50, if that. We've seen this one bar here. What's that pulling up? $3 move on that one 5-minute bar, so that's quite a big move for what gold has been doing. So obviously a lot of volume coming into buying for gold. Where we have to wait. I think gold's one of the ones that's been really sort of, I won't say unpredictable recently, but it has probably been a bit more of an up and down market. We've seen big sell-offs, and then literally as soon as the US comes on board, the high turns almost 100% and comes into a big buy in the afternoon, so that's why I'm being a bit cautious. Now, another hour or so into this, it might be that we've got some seller candles coming in and price starts to look like it might fall off and start to come back down, but at the moment I'm going to be very cautious on getting into another gold trade, only because I've lost out on 2 this week and I want to be a bit more cautious. I think it's one of those things as a trader, it's the psychology that always messes up the most. Technically anyone can look at a chart, anyone can place a trade, anyone can put in a stop loss and a take profit. I think the hardest thing for us is not to get caught up in the emotions, and as I've had 2 losing trades on gold this week, I could very easily be a revenge trader, just literally go in and say, no, I'm just going to sell this now. I was right the first time, but it stopped me out. I was right the second time, but it stopped me out. I'm going to be right the third time. I'm going to short this, but go in at, I don't know, 3 lots. I'm going to make up all of my other trades in one go. And that's the worst thing to do, is go in with an attitude of revenge, because the market doesn't care that we've lost 2 trades on gold. It has no interest in the fact that we're down 0.5% on our account this week. It doesn't care about us. We are just an insignificant player in this big transition of money around the world. And especially when, as an example, I'm trading here on a demo account because it's the FTMO challenge, just trying to get through this additional one. This has no impact on the market. I could go in with 1,000 lots and it wouldn't actually dent anything. So it doesn't care what I'm doing, it's just a computer screen. And that's why I'm not going to, so tempting now when the price is now hit 18.99, pretty much the top of that line. I'm not going to go and short this because that would be revengeful. I want to get more confirmation. We've got a huge buyer candle, therefore the buyers are starting to come in control. Now, the other things that I look at for trend following or momentum following, which that's my main premise around trading, although I've gone probably counter trend on cable, that's more because it's a range bound one. But if we're looking for a trend to be established, therefore I'll be wanting at least moving averages to be aligned. That shows me that over a period of 20 or 50 periods or candles, the price has been in a alignment, price has been above them, or it's starting to show. We're looking at momentum indicators. So here I have RSI on the chart, and we're seeing that we are above 50, and therefore the buyers are in control and price is likely to come higher and higher. So all these things are telling me that price is going up. So yeah, the charts and the price are telling me price is going up, but my mind says I want revenge. I'm going to sell you no matter what happens, and I'm not going to do it. Often when you get into that mental state and your mind's telling you other things, close that chart down, just literally get rid of it, because the more you start looking at it, the more you want to get in and do something about it. So the setup on gold at the moment, which is looking interesting. Work by zoom in again. We've got beginning of the week where we had this $20 spike up and down, again showing a real indecision. The rest of the week has been going sideways, 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 very, very tight range. We've now started to break out through what it has done over the past pretty much day and a half. If we ignore that sort of the big spike, day and a half, 2 days of not breaking above 18.95, it's broken up through that. Sloping trend lines are always poor just because they are subjective. I could draw it in a different angle just to meet my objective. They're more just to show me a range bound system rather than actually trading off. It's horizontal key levels of support and resistance and structure that I'm more worried about rather than just a subjective horizontal trend line, or sorry, sloping trend line. But now we've broken up through that, the price, I'm expecting it to come back down at some point into 1895, 1896, and if we're going to continue up, therefore price breaks up quite happily. It'll break up through that line and come back up to 1905. It's just that mental doubt in your mind. I say 2 losing trades this week on gold. Do you want a third? No. Are you willing to risk it based on what you're seeing and what you're reviewing? So back on a 15-minute chart, red candle as expected. We've seen a big surge up. We've got price coming back down. That's fine. I think the more I look at it, the more I'm going to want to trade it. So I'm going to move off, look at the euro. I think what's interesting here is we've had the big push up on the euro. It started to stall. We had a reversal bar come in. Now if we get another pull bar where we are now, then I can see price starting to come back down significantly. Let's flip back to FTSE. So we'll see after the open. This will be exactly the same on, we'll go to Dow Jones. So we've seen here, price at the open came all the way up, hit that resistance line, came all the way back down, starting to almost consolidate a little bit. I would have expected today to be a buying day on Dow for whatever reason. I think it's been in a good uptrend for a long period of time. Although we've seen a bit of a sell-off on some of the other indices, there's still a lot more positive news in the market right now. So again, looking at a daily chart of the Dow, it's just in a clear uptrend. It is just going skywards. Although we've had a few pullbacks along the way, nowhere near enough to warrant anything that would see a significant selling day. But again, also the size of the daily candle we're on at the moment is so small. Let's just zoom right in. Compared to what we often see around Dow, we can quite easily see a 300-400 point movement, and today we are literally range bound by 100. Which for Dow is nothing at all. I'm going to hazard a guess that the euro is coming off. only because I can see a profit on my GBP trade currently. Again, not massive, but it all adds up in the day. Just nice to be able to get some blue on the board and not be sticking with the red. So when we start looking at these in correlation, we can see that there appears to now be more selling pressure in the market. So we can see Euro coming off, GBP coming off, Dow coming off, gold starting to fall. So it's good to have that sort of tiled view to start seeing multiple markets, see if there's a correlation. We often see a correlation between some of the currency pairs and commodities. You can see at the moment they're just starting to fall off, which is, as I said before so many times, around that 2 o'clock, 2:30 time, there's that indecision, and US come on board and they literally reverse the game, which I hate. It'd be nice if you literally say from the moment you got up in the morning at 9 o'clock, you got in front of your screens, you said, okay, today's going to be a buyer's day, and you just look for all those opportunities for a price to pull back slightly and then buy. But no, we've got a complete rejection on the day, or a rejection on the past couple of hours more likely, because we've seen that probably from 11:30, 12 o'clock, price started to rally up, only in the past hour as it started to fall off. One of the things I'm really trying to work on at the moment, I'm finding it really hard, is letting the winners run and cutting those losing trades early. I've always struggled with it. I've always seen as soon as you get a profit, just take it, regardless of what it is. And I'm 15 pips in profit on this GBP trade. I was very, very close to closing it out then. And I thought, no, I'm going to let it run, just see what happens. And obviously it's now started to come back against me very slightly. Again, look on the 5-minute chart. So we can see where we got in, literally right at that top, and very quickly price came down. It's just the nature of the market, isn't it? Price is always going to come back and retest. It's always going to come back up to that entry point. It's just the nature of how things move. They're never going to move always in your same direction. So I could potentially see price come all the way back up to break even, and then after that surge all the way down to take profit. That's why I like a lot of times is once the trades are set up, just to walk out and leave, and don't worry about it, don't stress about it. Stop loss is in place. I'm only going to lose 0.25% on this trade, so it's not a biggie. Taking partial profits, good question. No, I don't. And is there a good reason for that? Not really. It's more the case of I've set the trade up, I'm in it regardless. Now, as soon as you start taking slight bits of profit off, I think sometimes your attention goes away from the trade, so you're not in it as much, and you just let it stop out. Whereas as I'm in the trade now, I'll probably manage it slightly differently if I start taking some of the profits off the table right now. If it was a real runner, let's say I was in a very long swing trade and I was expecting this to run for a week, 2 weeks, then I would move my stop loss up to break even, and I'd move it up to certain levels, and therefore it's locking in the profit. but not actually taking the money off. So I wouldn't ever let it run forever and just hit stop loss and reverse on me. I'd always make sure I've got some profit in there. It's interesting because euro, that's slightly different times. So euro is still starting to go up while pound is going down. Interesting. Back to the big view. So is one leading the other? Is because ultimately they're both correlated to the dollar. If we're seeing dollar weakness or dollar strength, we're expecting to go both the same direction. We're also seeing more euro strength and more weakness in the pound. How's gold doing? Now we get the emotions of fear of missing out. It's like, done that reversal. Was I right? Was I wrong? Do I need to take the trade now? Do I start selling it? Do I buy it? Who knows? But these are emotions we go through. I'm sure everyone watching goes through exactly the same things. It's just that you see something move massively. Oh, I missed that trade. I missed that trade. I must get in it. It's the fear of missing out, and the emotions just start taking over. I think that's, again, one of the reasons why I'm kind of enjoying these live streams is just because I'm talking it through. And if I talk it through and I do something completely irrational and against what I've just said, it makes me look a right idiot. And although I'm an idiot most of the times, I'm going to try and make sure I don't do it in front of everybody on here. So with gold having that reversal on this candle pattern, we're now seeing more sellers than we've had for a long time. It's also looking what it did yesterday, isn't it? It did the same things where it went all the way up and all the way down again. Obviously went significantly higher, came down and reversed back up, and it's obviously doing something similar now. It's just, to me, it's the US Open. It's the increase of volume, increase of users, increase of banks getting involved. Now, yeah, it would have been so nice to have shorted that there and got a $5 move. I say that for me would have been a revenge trade because price was going up, was above the moving averages, RSI momentum was showing into the buy. If I was shorting that, that's purely because I was looking historically back at the previous two losing trades and saying I was right shorting it then, I should have shorted it. So I'm waiting and waiting and waiting. So where are most of you guys based? Are you UK based watching this, or is it all around the world? I'm assuming, because I've got a lot of subscribers from, or viewers from the US, from UK, a lot throughout Asia and Africa as well. Yeah, just jump in the comments now and say where you're from. London, north of Stoke. I moved out of London 5 years ago now. Certainly don't miss it. There are times when, there's really nice parts of London. It's nice to hang out and do things, but just the noise and the constant on the go, I certainly don't miss that anymore. So I'm now based just south of Glasgow in sunny Scotland. Made the decision to leave London in 2016 and just couldn't decide where to go. Ended up moving to Newcastle first off and then moved up to Glasgow. It's been great. Definitely a much more relaxed way of life, just being able to enjoy some of the countryside, enjoy walking on the beaches, just enjoy a bit more of a relaxed lifestyle. It's not quite by the beach, and the house is bigger than what you get in London, so I would agree with that one. One day, yes, a big mansion by the beach would be nice, or an apartment somewhere in a nice tropical place in Spain or anywhere. So we're now half an hour into the US session, and this is often where things start to possibly settle down a little bit and get the shakeout from the start of the session coming in, and obviously we see a lot of the stock buying coming in. Now if we look at the US 30, that's now starting to recover a bit more, starting to get back up to this kind of resistance level. Coming back up to the highs of the session. Pound is recovering, so what I'm going to do is I'm going to cover that off. Let me put just put a stop loss in on British pound. Logic for that, if we look at this chart here, if price was to come up to where my entry was, which is 141.57, then typically the price that's forming a double bottom on this chart, on a 5-minute chart. So if we look at that as a chart pattern, we could very, very easily see a break of that and price come all the way up to 141.80. And so that would have taken my stop loss out. Now I'm just protecting that position, because where we are at the moment, if price does start to sell off again, I think if we get a break below that recent low, that will very easily push down to my take profit. So I'm covering both bases there, just making sure that if price does reverse quite suddenly, I've not lost out on the trade, and if it does what I expect to do, then I'm all good. And a flip side to that, if we're looking at euro, again, same chart patterns but in reverse, we'll be seeing a double top, and with a break through the, effectively through the R2 level. If you're looking at the pivots, a break through that would see price come all the way back down later today into 121.90. So we've both got similar patterns, both based on where we are on euro and GBP at the moment. So just being ultra cautious right now. Take a look at Tesla. Tesla's been really interesting of late. I'm not sure if any of you guys follow anything that Tesla's doing. But also does that gap, or is that just a break in the actual market data? Probably not. I think it's more realistic right now. So we'll zoom out of that slightly. But where price had that massive surge and came all the way up, huge rally in Tesla, obviously making Elon Musk the most richest man in the world, and probably one of the most crazy as well with some of his antics. We're now seeing a lot more pressure on the selling of Tesla, purely because there's a lot of fundamentals in their business model that don't stack up. So yeah, definitely Tesla, if we are looking at a break through that support level, we could see it come all the way back down to the $400 mark quite easily. I think a lot of people are now starting to short Tesla stocks. They've made a lot of claims recently around the cars they're going to be producing. Now, if you go back a couple of years when they brought out the Model 3, that was going to be their big saviour car, and it was. It's massively popular. And the orders they had for it, they took a long time to fulfill. They had to build a new production plant in the US. They're also building production plants in China. And all of the cars they're able to build on a quarterly basis are all sold. But they don't make any money on their cars. They all make it on green tax credit from other states in the US. And so when you look at the other things they're announcing to come out around the Tesla Cybertruck, the Tesla Roadster, yes, there's been a lot of interest and people put all their deposits down and want to try and get these things purchased, but they are just not able to produce those cars at the moment. They are still working on the Model S, Model 3, making them faster, more ludicrous mode. And I think at some point people will want to see more cars from them. I think their biggest asset is their infrastructure. They obviously heavily invested in making sure they've got the charging point networks in a place where it makes it more advantageous to own a Tesla and be able to drive long distances in the US. Maybe not in the UK so much. A lot of the Tesla stations, all of the service stations you go to, get filled up quite quickly. But definitely, as the infrastructure gets better, they also have a much more of a stake. They could almost better off licensing their technology to other car manufacturers and just use that sort of model, so you didn't have to keep producing these cars. At a technology level, they're fantastic, but I think their infrastructure would be more important to them long term than actual cars. So that's just my take on Tesla. A bit of a rant, but definitely there's some negativity coming into the price of Tesla. So a quick look at Bitcoin. Nice recovery. I'm going to check my crypto wallet later and see that the price of all my coins and tokens has gone up, which would be nice. Everything follows Bitcoin like crazy now. Gold. If only I'd sold there at 1898. Could have had a nice profit. But I'm not in this for retrospective. I should have traded this and then come back in and do another video saying this is what I would have done if I had only placed that trade. But I think with the trade I am in with British Pound, it's starting to come good now. And obviously Euro now falling off as well, starting to show a double top pattern I talked about. And the British Pound, we've seen that kind of support come in and a bit of a buying pressure coming in 10-15 minutes ago. It's now starting to sell off, so I'm getting close to my take profit. So I'm now again more confident. Stop loss at break even, so I'm not going to lose out. So the other things to start thinking about is, would I want to move my stop loss any closer to lock in more profit? Almost in like the scaling out side of things. I think where we are now, there's nowhere safe to place it. So typically, managing a stop loss, I would put it above the recent high, and that's kind of where it is now because I sold at the high. So if I put my stop loss in that safer place, I'd actually have to have potentially 5 pips worth of risk still on the table, which I'm not willing to do right now. And then you think, okay, could I move my stop loss to above the moving averages? Now, if we look at where it would be currently, the 20 moving average on here is obviously always the one I would be looking to put it towards on a short-term trade. And that at 141.49 is kind of just below where it's sort of got a bit of support recently. Look on a 15-minute chart, might give a bit more clearer idea. So would I want to move my stop loss up to that point? Probably not, because again it's a congestion zone for me and there's been a lot of indecision. So it could very easily spike in and take it out. So that level for me is not strong enough to move my stop loss to. So I think managing this trade at the moment is the best thing for me. It's purely just to let it run. We're in within 10 pips of hitting target, and these are scary times. It's always a case of, yeah, I want it to hit, just come and hit my take profit, just go down. It's not getting there, come on. Definitely now looking like we are in for a sell-off day, which is going to be the US coming and reversing all of the good work that was done throughout the morning session, which is fine, that's what they often do. Definitely euro dollar. Whoever was long on euro dollar didn't quite hit their take profit. It was close, and now that's going to, as I read the charts, and everyone's going to read it differently, looking at a 5-minute chart, I'll say this is going to be literally for the next hour or two. I'm likely to see price come all the way back down somewhere 122, 129, 119. Again, if multiple time frames all aligning, if we look at the 15-minute chart, we're still in an uptrend on a 15-minute chart. Again, it's still an uptrend on a 5-minute chart, but we are seeing that reversal. So price could come back down. 1 hour chart, again, still in an uptrend. We've broken out to new highs, high from a couple of days ago. So again, could argue an uptrend with a natural pullback before price rallies back on. One last look at GBP to decide whether I close this now and actually go and get some fresh air, as I've been sitting here for, what is it, hour and 15 now, and I'm sure lots of you guys probably want to get out and do something a bit more interesting as well. Staring at charts is just mind-numbingly boring. It just makes you go crazy. It's a bit of a shame as well, because normally I'd be sitting here with some music on, or I'd be watching some videos in the background, or playing guitar just to try and distract my mind. Whereas if I start playing music in my room, it'll come through the microphone and not quite sound right. That's why I've got a bit of a music track playing in the background, which everyone else can hear, but I can't. And it's also nice to be able to get up and walk around and stretch the legs. Sitting down in a chair is not conducive to anyone's health for a long period of time. So what I'm going to do is, it's been fantastic for the last hour and a quarter. I'm actually going to close that trade out because I want to go and take a walk and just clear my head and maybe come back in later and just see how gold is doing. Again, it's just in that up and down range. It could do anything. So yeah, it's been a reasonable session. What's that? 0.25% on the account. So not massive, but it's getting back to where I need to be. Not where I wanted to be this time of the week, but you can't always have the profits when they're not there. And I say I've had a couple of losing trades on gold, and I don't want to revenge trade it. Rather just sit back and watch and wait for price to come my way. But yeah, I'm going to finish this hour-long stream. It's been really good. Hope everyone's had a nice chill out time. No pressure, no stress. And if you're able to make some profits in that time, fantastic. But please don't follow what I do. It's only educational stuff. It could easily come off badly. So yeah, that's always the worry, is that people don't like to show their winning trades and never their losing trades. And I'll show anything. But yeah, it's nice to have a winning trade and actually show how that came about on that retracement back to a level, and yeah, sold from there. So yeah, thanks everyone for joining. I will see how I'm feeling tomorrow about setting up another stream. It's nice just to do a chill out one as opposed to anything else. Hope you've enjoyed it. And yeah, if you're not subscribed, click that subscribe button, give a thumbs up, and I will see you all again soon. Cheers.